Why AMC can and likely will rally 100% or more in this upcoming week, at the very least over the next couple of weeks. Well, that's what we're going to talk about here in this video, because statistically and historically speaking in 2022, every time this has happened, AMC has rallied to that same extent. Maybe this time will be larger, maybe it might be a little smaller, but on average you're talking about a 100% rally, and that could mean some big dollar hollers for the AMC investor. Now, let's get into this video. The only thing that I ask you to do is hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Now let's get straight into it. First things first, if we take a look at the Ortex data, we can see a 20.03% estimate of the live short interest. The last report that we got, we were sitting at about 21.64% short interest, but that was on November 15th, and obviously since then we have rallied quite a bit. So to think the short interest went down about 1%, maybe it's reasonable, maybe not. There's been some days where it looks like some small shorts have covered on positions, and just fundamentally speaking, you know, the stock looks to be in a better place going ahead into the future than it has in a long time, and that is really a big reason to want to cover on some of those short positions. Not by and large, they obviously haven't covered, but a small percentage of them, it's possible, and that would be less than 5% of all shorts that have covered their short positions, just to put that into a statistical number for you guys. Now, if we look at the cost to borrow numbers, that has been one of the most exciting things to watch as of lately with AMC stock, and as this stock did go up and hit the temporary peak that we have seen, you have seen the cost to borrow numbers spike at one point over 100% at that peak, but even now, as we are sitting really at this major level in which we're going to talk about here in this video, the whole premise of this video, why AMC is likely to rally 100% from here, the cost to borrow numbers have remained still steadily over 40%, sitting right now at about 44% for the live numbers. The shares that are actually being lent out, you know, 44% is pretty damn good. You can see a cost to borrow max of 64.17% and a cost to borrow average around 55%. So it's looking pretty good, and a lot of those adjustable rate short positions, you know, those interest rates going up, you know, when they pay out monthly on those positions, typically it's monthly, it can be yearly, but typically when they're paying out on those monthly and you see your payments increase by 100%, it really helps to squeeze out shorts on any sign of strength with the stock, and that is certainly what we have seen. Couple that with AMC's mid to long-term fundamentals looking a lot stronger now, essentially being because there's going to be a lot more movies going to theaters, even Amazon just investing $1 billion a year to make 10 to 12 theatrical releases, meaning they will only go to theaters for a set window of time. All of that fundamentally helps AMC, and it makes the prospect of, you know, should I cover on a short position, you know, it makes the answer to that a little bit easier if you say, hey, there's probably not a lot of negative catalyst on the near-term horizon. So I'm either going to be stuck with this short position for a long time, paying out insane cost to borrow rates, or I'm going to get squeezed out of my position. Either one of those does not look very attractive, and the latter really comes from a improving fundamental basis, right? If the fundamentals were deteriorating, this would be a totally different situation, and you can even try to extrapolate that into some statistical probabilities on how high AMC could go based off of that factor, because the last times we've seen these 100% rallies after breaking above this technical indicator, we have not been in such a strong fundamental place for the stock as well. So when you couple that in, you could definitely come to a conclusion that AMC could rally over 100%. I'm trying to be a little bit more conservative here and just go off of the numbers that we have seen already play out multiple times in 2022. And that technical indicator is likely no surprise to a lot of you guys, but it is the 50-day moving average. And we have seen this 100% rally after a break of the 50-day moving average 2 times in 2022. Really, both of these large rallies was followed from a break of the 50-day moving average. And if we take a look at the actual percentage moves that we did see back here, and I'm calculating just from the break of the 50-day moving average, not the rally from the lows, but just from the break, you've seen a 100% rally back here, and that was obviously in March of 2022. And then back here from the break of the 50-day moving average, just back here in August, from the break of the 50-day until the peak, you rallied 112.5%. So we have since seen that break of the 50-day moving average. Sometimes it happens quicker, sometimes it takes a while, like we see back in March. You broke the 50-day moving average and then immediately within the next week of trading rallied 100%. Back here in August, you broke the 50-day, went up, I believe this was about 40%. Let's go ahead and see. Yep, about exactly 40%. I'm good, man. Exactly a 40% rally from the break of the 50-day. Came back down, so you were only up about 7% at that point. And then that's when you continue to rally and hit those peaks at about 112% from the initial break. But from the initial break, that was July 7th. You didn't actually see the peak until August 8th. So it was about 1 month from the actual break of the 50-day. We held the 50-day, and then we saw that big rally. Now, based off of what I'm seeing here, it looks to be, if you just divide the averages here, it's probably going to be about 2 weeks, probably going to be roughly in that time frame. And as you can see, we've already been above the 50-day moving average 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days now. So if you're talking 14 trading days, technically it would be less than that, right? Because we're not open 7 days of the week to trade the markets. You would be looking at that 100% move coming this week, and that's where my kind of statistical probability is in my mind, and that's what I'm trying to express to you guys, is not that this is a guarantee, but statistically speaking, there's a greater chance than not that we could rally about 100%. And that's why I like to talk about the fundamental picture earlier in this video, because when you understand that, you can understand the concept and the mindset behind hedge funds and institutions with these short positions, because they're not in it just to short the stock because they don't like the stock. Sure, maybe they don't like the stock at the same time, but they want to make money. And when that threatens to go against them in such a substantial way in which it is right now, that's where you will see shorts covering, in my personal opinion. That's what will help squeeze out shorts from those short positions. So as far as my actual price prediction, guys, we are going off of, like I said, the statistical data and what has historically happened, and it does point to a 100% rally at least this week, and that's going to put you at about $14.50 per share. Now, I will give you guys a range, right? I do think if we break above the 100-day and the 200-day moving averages, then that's going to be a very good sign, right? That's the first level. Let's be logical here. The first level's 100-day, 200-day moving average. 100-day moving average is at $8.69 per share. $9.21 per share is the 200-day moving average. If you can break out of that by Tuesday or Wednesday, you could be setting up for a very strong end of the week. But you do have some data. You do have Fed Jerome Powell that will be speaking this week. That could definitely move things around quite a bit. But nevertheless, I'm still going to put my range in between a 100% rally on the high end. That's going to be about $14.50 per share. And on the low end, we're going to call it around $12 per share, $12 to $12.50. And that would still be a 67% rally for the week. I think once you break the 100 and 200-day moving averages, you might start to gas out a little bit around that key resistance level of $12 per share. That is going to be a key resistance level at $12 per share, like we have seen in the past around that level with AMC stock. So that is really, or I should say, those are really my thoughts on what the situation is. If we do go ahead and take a look at some of the Stonko tracker data, some of the other factors that I think are important, and unfortunately, Stonko Tracker is still not updating these numbers. But last we knew, December 16th, that's going to be the next big option expiration. You had about 130,000 calls that were out of the money and about 20,000 calls that were in the money. These numbers are not accurate, what we are currently seeing. But for the next 2 weeks, you don't have anything crazy as far as option activity, and that can actually set you up for some pretty big moves as well. Some of the bigger moves that we have gotten this year have not been on large option expirations. It's actually been on small option expirations because there's not a lot of that initial hedging from market makers, right? When market makers, or I should say, when you go out and buy calls or do option trades in general, the market makers are taking the back ends of those trades about 90% of the time. So when you're seeing a lot of calls that, you know, are sitting on the option chain, or a lot of puts for that matter, just in general, there's a lot of that pre-hedging already happening. If there's not a lot of option activity, then if you see an organic move to the upside, you will see let's just call it organic hedging to the upside as well. And that can help fuel you to the upside, guys. So that is pretty much it for this video. Volume was really low last week, so I am looking for some volume to come back into the stock. And by low volume, I mean Friday, the half day, was the lowest volume that you have seen in probably a year with AMC. You would have to go back and look at all these individual candles, but I can't remember a time AMC was sitting at 8.3 million shares, or 8.3 million for volume for a day. Typically it does not happen like that, guys. So let me know your comments, questions, thoughts, concerns, whatever you got for me down below in the comment section. Hit the like button and subscribe to the channel. By doing that, it might help you make a little bit more money, keep people informed about AMC and the potential that is still here, guys. So that is it. You guys enjoy the rest of your day, and I will see you in the next.